Howdy ho, ladies and gentlemen. Today we are talking about Section 2.3, deals with federal income tax. We'll get going here. The vocab you need to know. That's a lot of stuff that you're going to have to make sure you get going. Remember, things that show up in blue are things that we're going to be talking about as far as key information as equations and so forth. Right? We will be talking about deduction and exemptions that you'll have. A deduction, okay, if they say a standard deduction, it's $4,850 per individual, $9,700 for a married couple. Okay, so they will give you either a value for the deduction, or else they'll say a standard deduction, and that's these values. If they have an exemption, it's $3,100 all the time. Okay, if they have two exemptions, it's $3,100 plus $3,100, so that would be $6,200. Okay, so just making sure you are in light of those, and we'll go into a couple different examples here. So our first idea that we've got going is the idea of taxable income. Okay, and in taxable income, let's say you're single, you have a gross income of $32,600. All right, you pay $2,600 into approved retirement plan, have deductions of $6,900, and you have the one exemption of yourself. Okay, they want to know what your taxable income is. Okay, when we start looking through this, the first thing we're going to find is our adjusted gross income. We got our adjusted gross income. What that is we're going to take our income that we have, which is $32,600, and we're going to subtract out our approved retirement plan. Okay, so that gives us an answer, or minus 2,600, and we end up with $30,000 is our adjusted gross income. That's the first thing we're going to find out. Now from here, we take out our deductions and our exemptions. Okay, so we subtract out 6,900. We're also going to subtract out one exemption, which is 3,100 or 3,100. So we're going to subtract that out, and we end up with an answer of $20,000. That is our taxable income. Okay, so we start off with we're subtracting out all of our values here. Okay, and they give us, in this case, they give us deductions, so that means that's the value for deductions. If they didn't, we'd use those two numbers I gave you at the beginning. All right, and the one exemption's 3,100, so there we go. Okay, so that's our first example. Now our second example deals with the idea of income tax due. Okay, so let's say you're actually married and you're going to file a joint return. Okay, that's key, knowing your marital status and whether or not you are a filing jointly or separately. Jointly means together. Separately, obviously, is self-explanatory. So you and your spouse, you have a taxable income together of $23,425. Okay, and the amount that was already withheld from you. All right, so this is amount withheld was $2,669. Okay, obviously my comma's in the wrong spot. Okay, but they've already withheld. All right, your employers held out this amount of money. So what we're trying to find out is how much you get when you file your tax return, if you actually have to pay the government money or if you get money back. Okay, and we all hope that you get money back in the long run. So you'll be using a chart in your book. Okay, and this chart is found, I believe, on, let me look back here. The chart is found on page 55, and it's going to look like this. Okay, this is a blurry picture of it, but that's okay. So what we've got is we've got 23 to 2350. Okay, so we need to make sure we've got 23,425 somewhere in there. That's in this column right here where my mouse is. Okay, so we're looking in this top column of this third grouping. We're looking at filing jointly. Okay, so that's 2,000, All right, 2,799. Okay, that's the value we get from the table. So this is how much you actually owe. This is how much has been withheld already and kind of saved up. So we take the amount that's been saved up, we subtract out how much we actually owe, and you can see here this number is smaller than this number, so we're going to be in the hole 130 bucks. That means we owe the good people of the United States government $130. So that's what we're looking at. If this number was bigger than this number, they would owe us money. Okay, so the more that you can get withheld from your in your paycheck and so forth to take care of your taxes, your income taxes, the better off you're going to be. Okay, so that's what we got. Those are a couple different examples. Remember, get those equations written down from the beginning of the video, and good luck.